Hi, I'm Julian.
Hi, I'm Alice, and we're from InvestaCrowd. Our mission at InvestaCrowd is to provide real estate investment opportunities.
And this is our weekly wrap-up of all things crowdfunding. We talk about companies, deals, and regulations with a global perspective and a big focus on Asia. Two things this week to get started. We're giving a shout out to our VC partners, 500 Startups, who gave InvestaCrowd funding from one of their funds, 500 Jurians. They believed in the vision of the team, so thank you to all the crew, Kylie, Vishal, Jasmine, and Becky, and everybody else that we might have missed. 500 really came to Asia and changed the game in the VC world, and kind of really, I think, showed a lot of the want-to-be VCs how Silicon Valley really does it, so supporting a lot of great companies. Secondly, another story in relation to funds flowing the right way. I think they've recovered a big chunk of those billions of dollars lost in the Izubao Chinese P2P scam, where 800,000 to 900,000 people apparently lost funding. So apparently the funds came back from cash, real estate, assets, and other items. So that's all that was told. So two things.
Yeah, and we reported on the Izubao news a while ago where this was the largest Ponzi scheme in P2P lending. So it's good to hear that there's been some money recovered.
Yeah, that's right.
And so this week, in terms of real estate crowdfunding, I thought we could cover a topic that causes a lot of confusion. What is real estate crowdfunding? So we get asked that question a lot, and there's a lot of confusion about how is it different from fraction ownership or timeshares
Or REITs.
Or REITs. So in terms of timeshares, you're actually not, you have the right to use a property at certain allocated times, but you don't actually own title outright.
And never in the good times when you want them.
Yeah, that's right. And fractional ownership, you own jointly among other owners of the property, so you still have the same management issues, day-to-day property management, all of those ownership issues that go along with owning property outright. Whereas crowdfunding, you are investing into a single purpose entity that either loan money to the development project, or you actually own the property within that vehicle among other investors, but you don't manage any of the day-to-day property management issues.
Sure.
So, and what about REITs? How is it different from REITs?
Yeah, so the REIT is generally a vehicle. It operates like a stock and a fund together, I guess. The REITs generally invest only in established office towers in tier 1 cities, global gateway cities that have income producing. They, by law, I think, have to distribute up to 90% of the dividends. There's generally quite a lot of fees, high fees associated with it, and REITs typically return around about a 7 or 8% return. My explanation on the difference is every project that we've been looking at least is single purpose driven, so you're investing directly in a debt or an equity position into one particular project. So the returns are consistently higher, the fees are much lower, and it's not spread across multiple properties. So that's some clarity for the viewers.
So it sounds like in a REIT, the biggest difference is you can't dig into the fundamentals of a specific project, and you're kind of investing into a blind pool.
That's true. But the upside is you can trade it daily, and the rest of the projects are less liquid. So that is a pro.
All right, and that wraps it up for us this week. If you're interested in real estate investing, please sign up at InvestaCrowd.com.
Thanks for watching.